Welcome to this explainer. Look, if you're selling online in India right now, the rulebook hasn't just been updated this year, it's been completely torn up and rewritten. Today, we're taking the absolute latest e-commerce data, platform fee shifts, and critical compliance policies and transforming them into a step-by-step masterclass for your 2026 growth. We're going to break down exactly how you can use this massive shift to your advantage, totally overhaul your margins, and tap into regional markets that are just exploding right now. All right, here's our roadmap for today. We're hitting Section 1, the 2026 Margin Reset. Section 2, Mandatory GST and FSSAI Compliance. Section 3, Profiting from Regional Niches. Section 4, Winning Semi-Urban Consumers. And Section 5, Next Steps for Sellers. Let's jump right in. Section 1, the 2026 Margin Reset, Maximizing the New Amazon Fee Structures. We're kicking things off with a massive policy shift that has completely changed the mathematical reality for sellers on Amazon India.
Okay, so the magic number to keep in your head right now is this, 1,000 rupees. As of March 16, 2026, Amazon expanded their zero referral fees to over 12.5 crore products priced under 1,000 rupees. That covers more than 1,800 distinct categories. And at the exact same time, they dropped easy ship fees by over 20% for items under 300 rupees. Think about the sheer scale of that for a second. 12.5 crore products. This isn't just some quick promotional tweak for a long weekend. It's a permanent, structural change to the entire ecosystem. The major platforms are heavily incentivizing authentic discovery and lower-cost items, and by doing so, they are letting you keep incredible amounts of cash that used to just get eaten up by operational overhead.
Let's actually look at the math here in the real world. Say you're selling a standard 899 rupee product, maybe a fast-moving fashion jewelry piece or a mid-tier phone accessory. Before March 2026, you were handing over about 324 rupees in referral and shipping fees for every single unit you moved. Now, boom, that total drops to roughly 100 rupees. Your margins just skyrocketed by nearly 69% on that single item. That means 224 rupees is going straight back into your pocket per sale. Multiply that by hundreds or thousands of units a month, and you have massive, immediate capital to lower your prices, totally crush your competitors, and reinvest heavily into your advertising.
Moving on to Section 2, Mandatory GST and FSSAI Compliance, building a solid operational foundation. Because honestly, all that newfound profit margin means absolutely nothing if your seller account gets abruptly suspended. So let's make sure your legal compliance is bulletproof.
Do I need GST if I sell under 40 lakh? Listen, this is without a doubt the most dangerous misconception floating around the e-commerce space today. A lot of traditional offline accountants will look you dead in the eye and tell you no, but they're mistakenly applying brick-and-mortar tax rules to digital marketplaces, and frankly, this terrible advice is costing e-commerce sellers their accounts and their livelihoods every single day.
Let me be crystal clear here. There are zero exceptions to this rule online. You absolutely must register before selling. Under Section 24, Subsection 9 of the CGST Act, you must have a GSTIN before your very first marketplace sale, completely regardless of your overall turnover. You cannot use that standard 40 lakh offline exemption. Why? Well, the platforms desperately need your GSTIN to comply with their own mandates. They're legally required by the government to collect 1% tax collected at source, or TCS, on every single payment they route to your bank account. They literally can't track that cash flow and report it without your specific GST number.
So let's break down these mandatory registrations so you don't get caught out in an audit. First up, secure that GSTIN before your first sale to avoid strict penalties that can instantly hit 10,000 rupees or more. Second, and it's crazy how many sellers forget this part, you have to manually log into the GST portal every month and accept your 1% TCS credit. If you don't, that advanced tax just sits there, hurting your cash flow instead of offsetting your tax liability. And third, regarding FSSAI, if you're selling authentic regional food items, selecting retailer as your kind of business is absolutely non-negotiable for approval on Amazon. If you pick the wrong category, like manufacturer, you're going to be stuck in endless bureaucratic limbo while your inventory just sits there and expires.
Now, what if you're actively expanding your footprint to reach customers faster and win that buy box? Say you're leveraging new FBA warehouses, like the massive Cox One facility down in Kerala or SIXR over in Jharkhand. You must update your GST to reflect these as an additional place of business. The workflow is super simple. Identify the exact warehouse, add the location directly in the GST portal, and then upload that updated certificate straight into Seller Central. If you skip this, not only do you risk severe compliance gaps, but you're actually artificially limiting your delivery speeds. Local customers just won't see that coveted next-day delivery badge on your listings.
All right, Section 3, profiting from regional niches. High margin, localized opportunities. With our margins completely reset and our operational compliance totally bulletproof, let's look at where the real money is hiding in 2026.
Just look at the stark contrast between these highly scalable but totally different business models. On one hand, you've got authentic Kerala spices like Idukki cardamom and Telateri pepper. These items command extremely premium pricing because modern buyers are actively craving that direct-to-consumer purity straight from the farm. On the completely opposite end of the spectrum, consider Cochin customized apparel. Here, you're sourcing corporate or event t-shirts with zero minimum order quantities for massive, high-volume sales, where the margin comes purely from scale. Or take phone accessories, a crazy fast rotation market with margins soaring anywhere from 30% up to 80%. The opportunities are incredibly diverse, but they are all highly lucrative if you just pick a lane and aggressively own that specific niche.
Which brings us to Section 4, winning semi-urban consumers, understanding the shifting digital demographics. To effectively sell these niche products, we have to know exactly who is clicking buy on a local level.
Take a look at this recent academic study from the EPRA journal in Kerala. It captures this demographic shift perfectly. It essentially proves that semi-urban women are increasingly flocking to specialized niche platforms over the massive, generalized digital storefronts. And why are they making this shift? It really boils down to three things: the time-saving convenience of finding exact items faster, highly personalized product variety that actually speaks to their cultural needs, and a much deeper sense of trust that hyper-targeted platforms inherently provide compared to endless faceless catalogs. And guys, the demographic data doesn't lie. You absolutely have to heavily tailor your marketing and visual branding towards the 20 to 30-year-old consumer. They make up a staggering 68% of this semi-urban buyer base. We're talking about Gen Z and young millennials here. They are incredibly digitally literate, they fiercely value authentic goods over cheap knockoffs, and they absolutely expect personalized, targeted marketing. If you're selling those Cochin event t-shirts or premium Kerala spices, this 20 to 30-year-old bracket is exactly whose social media feed you need to be showing up in.
Finally, Section 5, next steps for sellers, turning strategy into action. We've covered the updated platform fees, the strict tax laws, and the local consumer data. Now it's time to actually execute. Okay. Here is your literal to-do list for today to safeguard your business and maximize your profits. First, dive right into your inventory and reprice your items under 1,000 rupees. Use that brand new 69% margin buffer we talked about to offer better deals and aggressively boost your conversions. Second, expand your catalog and push multi-unit combo packs. Keep in mind, shipping multiple units in a single package can save you up to 90% on fulfillment fees for those extra items. Third, do an internal audit this week. Verify your FSSAI retailer status and your multi-state GST additional place of business compliance. And lastly, get out there and source the authentic, high-quality regional products that the data actively shows your semi-urban customers are looking for.
Amit Nanda, the director of Selling Partner Services at Amazon India, really hit the nail on the head recently when he said, "When our sellers succeed, we succeed." It's that simple. E-commerce platforms are actively restructuring their entire fee models to build a significantly more sustainable ecosystem for small business owners like you. This isn't charity, right? It's just smart business. This new structure is purposely designed to support your long-term growth, explicitly reward your operational efficiency, and help you scale faster than ever before.
So here's what I want to leave you with. The foundational rules of e-commerce have been completely rewritten for 2026. With zero referral fees on a massive chunk of products under 1,000 rupees, crystal clear compliance blueprints to keep you safe, and exploding regional niches just waiting to be tapped, the opportunity is sitting right in front of you. The only question left is, are you ready to claim your unfair advantage? Thanks for hanging out with me for this explainer. Now take these insights, optimize your catalog, and go dominate your market.